Good morning, everybody, and welcome to the morning volatility report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, wishing you hello. How are you? Max Boninger, how's everybody doing? We had a lot of good classes last night at Option Pit. But today, understanding VIX and volatility by this handsome guy right here, Mark Sebastian. Okay? It's free. If you don't know anything about the VIX or you think you know something about the VIX, you're going to learn a bunch. Okay? How vol moves, how the VIX works, how the ETPs work. Not all of them, but gives you an idea. Okay? And, market indicators we use that we're using every day to help us with things. Okay? Free. After that, September 12th, we'll have a volatility and VIX primer with the ETFs, a little more in-depth trading structure with those products. And then we have boot camp from September 30th to Saturday 3rd, so look for that. And this is the classic indicator could expand amid a sluggish Eurozone economy, blah, 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 right? Ready to act if, I have to say, probably one of the world's best central bankers, considering the mess that he has to deal with for the most part. Trying to spend as little as possible and trying to push the Eurozone forward. Got to give the guy credit. All right. As far as what we've got here, whoopsie. And I don't have this open quite yet, but it will be. Okay. Let's take a look at Twitter's on the move on the CEO news, which could be actually pretty big. Maybe we might look for some sort of long side trade in there, but it's probably after the news. It's going to sell off a little bit like it normally does. But it's definitely rallying today on some news. Okay. So what do we have? Vol products finally starting to give it up a little bit. Products like UVXY starting to suffer, down from $83 to $63. You're going to see, if this continues, you're going to start seeing this stuff get totally crushed. A cash VIX right now just below 25, and as you can see here, all the futures are starting to what? Sub future is still below the cash. Right? So what we're getting is it's a less panic backwardation. There's $1 of backwardation here between OC and SEP. Right now it looks like the market is pretty much saying, hey, you know what? We're not going to see very much in the way of the Fed in September. It seems to be that's how the conversation's going. All the market turmoil, whatever, making the Fed push things to December. How big a difference that makes, I don't know. But I think we had a lot of volatility from the fact that there was going to be less stimulus out of the Fed. So, and I think that's what we got right now. So, as far as all that goes, I think the non-farm payroll number will be relatively important. If it's just kind of ho-hum, Fed pushes things off till December, maybe that's enough to make the market happy enough to kind of get us through this emerging markets problems that we have. Okay, that's how I see that at this point. Then the secondary catalyst will be whatever the Fed meeting is. So we could still have some chop. It might not be a 30 VIX like we had a couple days ago. Okay, right, this little peak here. We're still getting pretty big moves. We could easily be up another 1% today. We could be down another 1% today. It could be up 2% today. Okay? Everything is all over the place. So maybe we're not a 30 vol market, but maybe we're 25. Still pretty volatile, still choppy up and down. But as of right now, volatility is coming in as everything's starting to normalize. I think you could look at XIV at this point if you'd be a little bit more aggressive at it. It's $3 off its lows, give or take, an intraday low maybe. As the vol starts to normalize a little bit, you'd be getting ahead of it. There's ways to hedge. We'll talk about that in our chat today. As far as the vol products go, a so-so number, I think that'll at least start pushing things down. The only worrisome thing I have here, I see, is this. All the emerging markets are really not recovering, right? China's up a little bit on the parade. I'd probably maybe the Bank of China is adding a little stimulus, but still, as you can see, near the bottom. So you still got, and then we'll take a look at the Russians. What are they? RSX, right? All of them still having a hard time, right? Still having a hard time. And until you really see some sort of stabilization in the global markets, it's definitely whatever's been going on over there has transformed over here, because the U.S., by contrast, looks pretty darn good. Even with the drop and the little pop back up here, doesn't look too bad. Relative. I mean, we're still very, very close to our highs. But as soon as the QE era stopped, we stopped making new highs. So a lot of that, I think none of that really has gone away at this point. So probably still a trader's market. And depending on how we shake out until the Fed, I think that's going to, till the Fed, whatever does their final pronouncement here in September, we are going to trade basically based on that. So that's it. So again, we're once again in a central banker stimulus market. They just talk and we rally. So the fact, as much as it's going to rally or the rally holds, that will kind of determine what we have going on. All right, everybody. You have a good day. I will see all of you shortly in the Option Fit chat. Bye-bye.